Let's take a look at some practical examples of how the Zacks Rank can get you in and keep you in on some of the most profitable stocks. Whether it's a widely known large cap stock, little known small cap stock, or somewhere in between, the Zacks Rank works and the steps to success are the same. Manpower Group, ticker MAN, is a leading employment services company in the US and abroad. Even though they're well known in their industry, it's not one of those names most investors are familiar with. But it's definitely a name Zacks customers are familiar with now. On June 28, 2013, the stock, which had been in a trading range for months, got the signal that alerted investors that it was finally ready to break out. That signal was the Zacks #1 ranked strong buy, which forecast that it would outperform the market over the next 1 to 3 months. At that time, it was trading at $54.80 with an earnings estimate of $3.67. 2.5 months later, and a series of upward earnings estimate revisions, including a positive EPS surprise, MAN had retained its Zacks #1 rank and gained for its investors a 34% return versus the S&P 500's only 5%. Simply put, when earnings estimates are going up, the stock should go up as well. And your best first alert that a company's outlook is improving is a Zacks #1 rank. The Zacks Rank is ideal for getting you in on the most profitable opportunities over a 1 to 3 month period, making the Zacks Rank an excellent timing indicator. But it's also great for getting into stocks that develop into longer-term trades and core holdings. One of the toughest parts of investing is staying in a stock that's going up and not getting out prematurely. For whatever reason, too many investors are quick to cut their profits short and let their losses run. Of course, the opposite of that is what should be done. But by following the Zacks Rank and the trajectory of earnings estimate revisions, not only will you know when to buy, but also learn how to ride your best stocks for bigger gains. And when the time comes, know when to sell. FleetCor Technologies, ticker FLT, is one of those stocks that looked set to outperform over a 1 to 3 month time frame, but then turned into a longer-term holding, resulting in even more impressive gains. The company operates as a provider of specialized payment products in the financial industry, and it quickly became a favorite holding in many portfolios. On August 17, 2012, they were singled out as a top stock when it received a Zacks #1 rank. Even as many investors were still shunning financial stocks, this one stood out from the others, ready to outperform. Over the course of the next 14 months, through October 4th of 2013, they received 59 upward earnings estimate revisions in a row, produced 4 positive EPS surprises, and rewarded investors with a 163% gain compared to the market's 41%. During that time, their 12-month forward earnings estimates steadily climbed from $291 to $425 and was the clear catalyst for FLT's stellar gains. Once you're in a stock destined for greatness, it's important to not get bucked off. To be sure, there were both positive news stories and negative news stories throughout their run-up, and the broader market had its ups and downs. But their earnings estimates kept pointing higher, keeping you on board the entire time. That's why Robert Taylor of Edisto Island, South Carolina wrote, "I've bought several stocks that appeared in the #1 listing that I continue to hold as core holdings."